Okay, this week we're going to talk all about the latest Disney earnings. It's going to be a full deep dive episode. I got way too much research than what we're going to have really need for, but that's really like my MO usually on these. This is
Don't worry,
Green.
it'll be more fun than it sounds. All right.
I hope so.
We'll make.
I hope
we'll
so.
make. That's why. That's the only reason I'm here. That's the only reason I feel like I said, like you've heard me say, episode after episode. Philip does all the heavy lifting. I just show up and do color commentary and. I don't know.
But it's great because then I get real time feedback for what the information is. Well, this is Green Tag Theme Park in 30. I'm Philip, and I'm joined by my co-host Scott Swenson of Scott Swenson Creative Development. Each week, we review the week's top news in theme parks and tourism, and we kind of discuss why it matters. And of course, I looked at this last week's news, and I really think that the Disney earnings are the biggest news piece, which is why we're devoting the whole show to them. So. Yes, without further ado, let's get started. Overall, the news was good with a few caveats, but it was very good overall. They reported top line and bottom line growth. Revenue for the quarter came in at $24.7 billion, which is a 5% year over year increase. And it definitely beat the analyst expectations. And the reason behind this, it all ties into their streaming and their parks. These are the two big pillars that are really driving this return on here. And specifically, we'll get into the parks next, but specifically the international parks, not the local parks. So what we're going to do is, during the earnings call and all this kind of stuff, they broke it up into divisions. So that's how we're going to take this. We're just going to start with the parks division because this is called Green Tag Theme Park at 30. So we're going to start with the theme parks division, and then we'll go through each.
Important to all of us, let's be honest.
That's true. That's why I devote the most time to it. So we'll start here. So the parks are the cash cow.
Knowing full well that we'll talk about it too much, and we may not get to the other stuff. So you got to get this stuff in. Got to get it in right away.
Yeah, we're leading with,
especially if I keep interrupting Philip. So go ahead.
If it bleeds, it leads, right? And I guess it's bleeding. I don't know. Okay.
No. Go ahead. Talk about the parks, Philip.
So the parks are the cash cow of Disney. And the only caveat here, which was brought up by a few people and a few analysts after the presentation, is that if you're looking closely, you do notice that there's problems with the domestic ones, and the international ones are the ones that's carrying the whole division, basically. But the way that Disney management explained it is that there were unusual events that trimmed about 5% of the domestic parts of growth. And they specifically named Hurricane Milton and Helene, which impacted the Florida parks. Also, they had the pre-opening cost of $75 million for the launch of the Disney Treasure Ship. So they argue that if you exclude these one-time factors, the underlying parks business grew year over year, highlighting the strong demand. This is me. I would just argue that these are not going to be one-time factors because there's going to be more hurricanes. But I understand why on the call they would try and minimize these as acts of God, basically.
But I think you're also going to see that if God forbid there is some sort of natural disaster that takes place in the parks outside the U.S., then then those will be down. So I think it is important. Data can be made to say pretty much anything you want it to, but it sounds to me, and you've done much more of a deeper dive on this than I have, but it sounds to me like they're at least being transparent. You can't just ignore the fact, having been here in Florida and seeing how badly Milton tore up my neighborhood, I get it. I get it. And it's not just, the damage to the park, which was minimal, but actually by comparison, it was the damage to everyone's house who lives around. And the fact that, the hour and a half drive it normally takes me to get from Orlando to Tampa took 5.5 hours because of all the trees and the flooding and people can't get to work. It's not the damage to the park that those things impact. It's their staffing, as well as the hotels that surround. We lucked out our hotel had no damage because we actually rode out Milton in Orlando. But I think it's fair that they mention it. To your point, are there going to be future hurricanes? Yes, but who knows? It could be a tsunami, or it could be something else that happens in other places. You just have to factor that in. You can't just
like a wildfire.
That kind of call. Well, you can't ignore it in this kind of call. That's not fair on the other end.
I think I like that they did talk about it, to your point, but I guess I'm just saying we need to start having the discussion about, because we just had the wildfires that caused, like you said, all the disruptions on Disneyland side. We won't talk about this on this show, but also the Tokyo Disneyland reported the same problems with attendance, but related them to excessive heat waves. And so all over, like all these parks are saying weather is causing guests not to want to come to the park. So this is not unique to Disney. I mean, SeaWorld has been saying this forever. So it's not unique to Disney. I think that what analysts are finally realizing is that Disney is not immune from
Right.
the weather impacts.
Absolutely. And truth be told, when you compare weather conditions versus catastrophic acts of God like wildfires or hurricanes,
Mhm.
weather conditions you can plan for.
Yep.
And you can do some planning for, catastrophic acts of God, but you can plan for it. You're just less likely to know when exactly they're going to hit and how they're going to impact you. So,
Yep. Well, the international parks were up about 28% of a year over year rate, which is incredible. I mean, that's high double digit growth. And so that's really what was driving this. It basically, on the macro sense, when you're looking at it, you're looking at the domestic parks that are relatively stagnating. And then you're seeing the international parks that are still having that, post opening boom. So in looking at pricing, this is where there's good news for everybody. So the per cap spending at Disney's parks rose about almost 7% on admission in 2024, and merchandise food sales per guest climbed 4%. So I guess unfortunately for Disney fans, that really is proving that the price hikes so far have been tolerated. Not only that, but the resort hotel occupancy was also up 5% in domestic travel. They did talk specifically about this because this is always a part that the Disney fans always are upset about, is the pricing. And Bob Iger did call that out like explicitly on the earnings call. He said, "We remain deliberate about pricing and the guest experience and are focused on providing guests great value with a vast array of options to visit theme parks." So a lot of the people in our community, I'm thinking now about some of the guest columnists on Theme Park Insider, but they kind of were like, he can say that, but doesn't mean that that they're going to actually do that. It's kind of like he might just be saying it to like kind of basically like we'll see, because so far all they've done is like really increase the prices and not really like done too much besides like the SoCal resident 3-day pass. So, but I think
but
we're going to see if there
as
is
you
a
just
ceiling.
said, they raise their prices and people are paying it.
Yep.
So
Yeah. I mean, yeah. When you get like
that
people
sounds
still tolerating all
deliberate
this.
to me, to just use a phrase from the quote. That sounds very deliberate about pricing and guest
Yeah.
experience.
Yeah. Well, I think he was trying to say that they were going to be deliberate in providing a good value for the price so as not to squeeze out middle income families, because the analysts are actually worried now that the prices are getting so high it's squeezing out the bulk of the people that are attending, which is middle income families. But so I think Iger's trying to walk that line where he's like, oh, we're going to be able to make more money, but also we're not going to lose the middle class. And that's a tight line to walk, I think.
Well, and I think you have to look at that quote. I mean, if you take
Yeah.
that quote, and I'm taking it out of context, I realize, but if you take that quote and say, we remain deliberate about pricing, doesn't say cheaper pricing, higher pricing, it just says deliberate about pricing and the guest experience, and are focused on providing great guest value,
Yeah.
which is also not pricing, value with a vast array of options to visit our theme parks. So, are the days of the local super cheap passes gone? Yeah, probably, because the local super cheap passes, they don't buy anything in the parks. There's no
No.
additional revenue. So it is from a business standpoint, it's a bad investment. But I think that as long as people keep paying it, to me,
Yeah.
that means that their pricing structure is working, and the fact that the revenues are up, 5 to 7%, kind of across the board, as you've discussed here, that's pretty good. That
Yeah.
shows that you're in that sweet spot.
Yeah, I think when I read that, I actually thought about, we'll get to this next, but I thought about their pricing strategy for streaming. And I was like, this sounds like if they could find a way to have an ad supported tier for attending theme parks, they would. Like if they could find a way to like have both, to have like the premium tier, which is the ad free tier, or the even higher, and then like an ad supported tier, they would do that. That kind of sounds like a very similar strategy.
Well, and it's very possible that's what's gonna happen with season passport membership. You have
Yeah.
they could build and they've already got the infrastructure there. It already kind of exists, except instead of making it part of a higher tiered pass, you have to pay an additional fee to get the basically shorter lines.
Yep.
So
Yep.
it's
Yep.
kind of what they're doing already.
Yep.
So I think you're right.
It's interesting. Yeah. So onto the cruise portion. So Disney is very bullish on their cruises, and they're planning to reach 13 ships by 2030, which we haven't talked about that too much, because the cruises are slightly outside of it, but we have talked about how they are trying to extend, the theme park experience onto the cruises. And it looks like they're really doubling down on this because, the expenses hitting their account, talking about how they're going to keep going in this direction. Right. Basically, like, there's not even time for them to sit and see how it's going to perform. Like, they are building these ships back to back, and they're really doing more of a global presence for these, as we've talked about, because they're launching them in Asia and and around the world, not just here in the US. And of course, they're putting on IPs in them. The current fiscal year includes 200 million in pre-opening expenses for the ships they have planned that are going to be coming out. But they really, really see this as a big avenue to expand into. And just for context, I mean, like, they only have like 6 or 7 now ish. So that's basically doubling their ships by 2030, which is like only 5 years. So it's a big expansion.
Well, and it shows that there is a market for it. I mean, as you said, they're not waiting to see how these are going. They've already done the proof of concept. They know that they can fill these ships.
Yeah. It's theme parks at sea that can target people from a bunch of different demographics, that wouldn't I mean, like, it's whole new markets. Like, it's a whole new world of theme park.
Whole new world. Yeah, it's I only sung that many notes because that way we don't have to pay rights. But yeah, you're absolutely right. And what's interesting is you say this is kind of a little bit on the periphery, but it's really not when you look at the entertainment world, because again, the exact same entertainment companies that are providing entertainment for theme parks are also providing entertainment for ships, and specifically Disney ships.
That's an excellent point. Yeah, it really is a
So it really ties
cross-performer.
directly into our industry and impacts us in a very positive way if they're going to continue to expand. And I will also say that, anecdotally, just looking at the number of cruise lines that are back online at the Port of Tampa, they're full. I mean, they're sending ships out all the time. So yeah, this makes total sense that Disney, who is all about family entertainment, and Carnival has just opened a whole new private island, and there's a bunch of indicators that say the cruise line industry is back. And of course, I have to, as I say that, in the back of my head read the article from a Royal Caribbean ship where there was an outbreak of another stomach virus. But that said, people still want to go on them, and especially Disney ones, because they are so. I mean, I've heard more people talking about on the Treasure. I've heard more people talking about the Haunted Mansion bar than really most of the theme park attractions. So they're more excited about that kind of immersive experience. And again, the nice thing about a cruise ship is it is more personal. It is more immersive, because literally you are living in the world that they're creating.
Yeah. Well, looking ahead, Disney expects that the park experiences will grow 6 to 8% in 2025. And Iger said that our Q1 results for our travel experiences segment demonstrates Disney's strong and enduring appeal in family travel, with a robust slate of new offerings planned and carefully designed and planned investment strategy. You might be wondering why they think it's going to be that much. And
hey, Philip, why do they think it's going to be that much?
Yeah. Well, so here's the thing. I think that they didn't explicitly draw the line between Epic and that percentage point, but they were asked about it. And the CFO said that Epic Universe opening up may have some impact, but he noted summer bookings at Walt Disney World are actually up year over year, despite the looming Epic Universe. And then this points to a theory that we have talked about, and that a lot of other people in our industry are insider, professional industry have talked about, which is basically that Epic Universe opening up is actually going to provide a boost to Disney sales and reservations. And that is why the summer bookings are up year over year now, even though traditionally, summer has been more soft now because of the heat, but they're up because Epic is opening in May, and that's driving people to go see Disney. So basically, it's like a lot of people in our space. I'm thinking right now about some of the Theme Park Insider or the Attractions Magazine people that are like writing in our space. They are saying that people that might have been waiting to go on their Disney trip are now combining their Disney trip with their Universal Epic
Universal
trip.
trip. Yeah, we used to refer to it as the halo effect. I mean,
Yep.
it's if you've got again, I think I said it even on the last episode when Animal Kingdom opened, Busch Gardens had the halo effect from that because again, especially with international tourism, they decide, you know what, we're going to go, but we're going to wait until Epic opens, and then when we go, we're going to, instead of doing a week, we're going to do 2 weeks, or actually, if it's international guests, instead of doing 2 weeks,
Yep.
we're going to do 4 weeks. But they basically hold off so that they can get the most bang for their buck. What within Florida, at least, and I believe this to be true pretty much worldwide, when there is something new to the area, it brings people to the area and they experience not only the new thing, but also the other things that are within drive time.
Yep. Yeah. It's interesting to me how much like the analysts and the people on the outside are like obsessed with this competition. But like you just explained, I don't really think that those of us in the theme park world consider it competition. We think of it as growing the overall market, addressable market.
Mm-hmm. Without completely oversaturating it. And
Yep.
that's part of the reason that Disney here in Florida has tried so hard to make certain that you never leave Disney property. That's why
Yep.
they have so many resorts and so many things that are on Disney properties that you really don't have to go off Disney property if you don't want to. One of the things that I don't think that necessarily takes into consideration is people who are traveling here from even different parts of the United States, but also internationally. They're like, well, I want to see what all is there and kind of
Yep.
get a dim sum of everything. Even if I don't experience every single centimeter of Disney property, I want to see what else is in the Orlando, Tampa, Orlando corridor, the Central Florida area.
Yep.
The other thing that I think is interesting about what this is saying is it shows that what we've again said many times, what's good for the industry is good for all of us. And
Yep.
so as the industry draws more and more attention and more visitors, it's going to help all of us. When it comes to competition, if you've worked in a theme park in an area that has lots of theme parks, you will know right off the bat, and some of you are just going to start nodding when I say this. Guests will ask, "Excuse me, where's the Haunted Mansion?" And you have to tell them that's in a different park.
Yeah.
Because guests basically put, when they're on vacation, it's like, "Oh, we're going to see theme park, and we're going to go see Great Theme Park." And we used to get all the time back in the day. We used to get all the time at Busch Gardens. Can you tell me how to get to Splash Mountain? Yeah, drive about an hour and a half northeast and go to Disney. So I don't even think guests necessarily differentiate as much between brands. Now, because the parks, Universal and Disney especially, are leaning more and more into IP, that's made it a little bit easier, a little bit clearer. But still, when people are on vacation, they want to do everything they possibly can in that area. And I think what's even better about it is now we have enough saturation that it's going to cause repeat visitation. So it's not just, we'll go to Orlando or Central Florida this year, and then next year we'll go to Barcelona. But then they realize, wait, we didn't do everything in Orlando. Let's go back to Orlando because we missed this, and this.
Okay. We need to move on to streaming. Speaking of IP, or the enduring appeal of IP, and we need to go faster because it's a little. So I'm going to try and go a little bit faster and summarize this faster to get through more segments. So streaming, this was the other big part on it, and it is doing well. This was the third straight quarter of profitability. It hit about the streaming, which is Disney Plus and Hulu, hit about $293 million in operating revenue, which is a big difference from the $138 million loss that it had a year ago. And they actually the CFO expects that the streaming segment will make more than $1 billion in profit in 2025. And really, what's happening here is that it's pricing again, just like we talked about with the tickets. It's a pricing model here because it's what they've done is they've spent less on content and they've grown their ad revenue, and then they're making it more accessible to people by providing that that ad supported tier and investing less. So they're basically controlling costs and they're bringing in more top line revenue, which is what's finally flipped it into profitability. And they actually described that they were pleased that the churn wasn't worse after the price hike. So Bob Iger said we had expected a significantly higher number of account closures after raising prices. And the company was surprised that so basically it's the same thing as happening in the parks. They raised the prices and they added this ad supported tier, and they were like surprised that more people didn't cancel. They still do expect there to be modest decline as these like pricing changes kind of flow out and people look at the bills and all that as it goes, but they still expect it to be $1 billion in profit for this next year. And just for some context here, 60% of the new Disney signups choose the ad-supported plan. So it really has been working. They've also hired in some people from YouTube to enhance their tech stack so they can do better personalization engines and redo that. They also divested their segment in India. So basically they decided they were like, we can't handle this India streaming thing because the content's like too different from what we're doing. So they kind of divested that segment, which is opposite of what Netflix is doing, right? Where they're like moving to have more content in all different countries. But Disney is like, y'all, we are like English speaking families, like, so let's just focus on that and divest some of these other things.
Well, and the 60% of new subscribers going for the ad supported tier does not surprise me at all, because the reason they weren't subscribers is because they didn't feel they could afford it. So now that a cheaper option is available, that's why they're going, oh, well, I mean, we can get it for less than we thought we had to pay before. Okay. And commercials, we're used to that. So, it makes total sense.
Yeah, no. And I think
publishing model. It's the book publishing model.
And it's all aligned. It all makes sense. They remember previously they made the agreement to buy Hulu. And so that's going to come up towards the end of this year. So they're most likely merging all that content together. We probably won't get time to talk about this, but you already see that basically their large plan here. We won't have time to talk about ESPN, but their large plan, they're betting also big into sports, which is similar to what we talked about with Comcast earnings, but they're essentially trying to integrate all of this into the one app. So once they have full ownership over Hulu, they're going to try and like merge a lot of that content. They're also including parts of ESPN into the app as well, just to make it a more robust offering for the new subscribers that are coming in. And now a lot of analysts are like comparing this to Netflix. And basically they're like, look, Netflix added 19 million subscribers in the same quarter. So by comparison, Disney Plus is fighting to be number 2 or number 3. And they're like, clearly Netflix won the quarter's battle with overall streaming war. And while Disney's streaming business posted a modest revenue increase, it was largely driven by price hikes. Price pinching consumers isn't a long-term strategy. That was from Reuters. So basically, I think this is another problem again. I think the analysts are like trying to compare Disney and Netflix, right? And they're like, oh, well, Disney's losing and you can't keep raising your prices forever because consumers aren't going to allow it. But I don't think that's the point of Disney Plus. I kind of think it's more to go vertical and to drive Exactly. So I'm not sure you should compare it to Netflix.
Well, and I find it, I'm going to go off on a minor sidetrack, but it's not going to take long. Since we've talked about Epic and we've talked about the purchase of Hulu from Comcast, I don't know whether many of you have seen the meme that just makes me laugh. It says, since Bob Iger paid Comcast $8.6 billion for Hulu, Disney just paid for Epic Universe. Think about that one for a moment. I'm sorry, go ahead.
Yeah. No, that's basically what's going on. And
so they recognize that Epic is not going to be a huge detriment to the Disney parks. And they're also recognizing that the Hulu content and the Hulu subscribers are going to help their streaming. So to me, that sounds like a weird but unique business approach that probably is pretty darn smart.
I think that it's almost like Disney is still playing chess and other people are still playing checkers, right? They're looking at they're looking at making like a Disney lifestyle. And all these individual analysts are just looking at comparing, similar businesses. But Disney's like, no, we are trying to make a Disney lifestyle, and we're trying to make sure that this app is robust enough to like survive. Like it doesn't have to be Netflix. It just has to be one of the things that you keep.
Right. How very meta of them.
Oh, geez.
Not the
okay, so
the concept.
let's we only have 5 minutes left, so maybe we should jump to the ESPN thing because I think it's the most interesting. I'll give you the top line. The content strategy, they were excited because they were they had Moana 2 and Mufasa did really well this year, and they were the first studio post-pandemic to surpass the $5 billion in global box office. So they're happy about that. And of course, Iger is like, oh, our content strategy is working. We're back to making good content. And I'm like, well, we'll see, because you had a lot of Marvel stuff that didn't do well. But
well, and Moana
they also talked about
from a critic standpoint, but that's a whole other story.
Yeah, okay.
People
linear TV. Linear TV, they talked about linear TV being on the decline, it's continued to be a decline. A lot of people were thinking that basically Iger had a whole section where he's like, Disney's traditional TV networks are not a burden, but an asset. But he also said he won't rule out the possibility of some of the smaller networks being configured differently in terms of how we bring them to market, maybe even different ownership. So a lot of people are pushing for them to divest basically those assets and get some cash for them. But he didn't commit to that. He just said it might be on the table. Okay, ESPN. This is a big part of their strategy, and it's going to be a lot of money they're going to invest in for a while. So essentially what they're trying to do is they're trying to make, later this year in 2025, they plan to roll out what's called ESPN Flagship, which is a streaming offering that will include the full ESPN linear channel plus additional exclusive content. And essentially this will be the streaming version of the main ESPN cable network. And here's specifically what I want to draw your attention to. This is what they said in the earnings call. Iger said, the service aims to be a digital destination for sports fan unlike anything available in the marketplace today, with the full suite of ESPN's networks and ESPN Plus, highly interactive and personalized features. Flagship is not really designed to preserve a business. It's designed to grow a business in a market that's evolving right before our eyes. We're extremely excited about it, and we think it's a sports fan's dream. If you're a sports fan, it's not about one day and one event or one night of football. It's about sports every single day of the year and every hour of the day. So, I mean, there's a lot more. We don't have time to go into it, but basically, the top level is Iger is, I think, painting this vision of how they're going to break into this sports arena and take what seems to me to be their Disney approach, which we just talked about,
lifestyle.
Where they're like, hey, look, we're going to have all the sports all the time. And if you're a sports fan, you're going to want to just be glued to this constantly. And now analysts have noted, and they also talked about this, but basically the more sports you put on this thing, that's the more licenses you have to pay. Right. And so a lot of people are like bringing up concerns about the amount of costs that go into this, especially with the renegotiating fees or some of the contracts they already have in ESPN. So that's a big like section of this. But what they say, in what they say is basically they're like, look, we had some of the most watched segments in history, in the history of some of our platforms, like with sports. And so they're kind of pointing to the enduring appeal of live sports, and why it's important to kind of break into that, because the numbers they cited were, let's see, the 2024 season of Monday Night Football was second most watched ever on the platform, and ABC's college football hit a 15-year high in 2024. And advertisers also are paying a premium on this content because domestic ad revenue jumped 15% year over year to 1.3 billion. Thanks to the higher ad rates. So you have on the one side the skeptics that are like, this is going to cost a lot of money if you're going to license all this stuff to make this a big, stuff. But then Disney is like, yes, except that we can charge way more for the ads and people are paying that money. Mm-hmm. And if we can make this a thing that people get addicted to, it becomes part of their life, and we can like go vertical with them, then that means it'll pay for it.
Yeah. So. In essence, what it sounds to me like he's saying is, we're going to make ESPN what we claimed it was when ESPN first started, which was all sports all the time. And then it became ESPN this, ESPN that. It got completely watered down and spread out. And now he's bringing them all back under one big umbrella, ESPN flagship, which makes total sense. And the other thing that I think you need to take into consideration here is U.S. sports are very, very popular around the world. And especially in places like the Middle East, where attractions and entertainment continue to grow because it's part of their 2030 plan. There's a lot of legs to what he's talking about here. So I'm glad to see that. However, we have to take our legs and run away because we are out of time. This is Green Tag Theme Park in 30. Thank you for joining us for this episode. If you'd like to become part of our Patreon supported Green Tag Unhinged, please go to Patreon and search Green Tagged, and you will find us, and you will hear even deeper dives and a bit more unhinged perspective on some of the information that we talk about on this show. But that aside, we will see you all next week here on Green Tagged Theme Park in 30.